The Forex market is a complex one, and to succeed you need a fast and efficient way of identifying individual currency strength and weakness, and from there to see how this is reflected in the many pairs across the timeframes. The Quantum Currency Dashboard is a unique package of 4 indicators, which together give you the tools you need to highlight and identify currency flows and their associated strength and weakness quickly and in all time frames. Now, with just 4 indicators, you'll be able to monitor every major currency and every one of the 28 currency pairs from 1 minute to 1 month, and all from just one screen. No chasing from one window to another, no multiple screens or crammed workspaces. With this unique dashboard of trading indicators, you'll be able to see instantly every aspect of currency strength and weakness for each currency and every currency pair in all time frames, and at the click of a button. So what's included? Well, first we have the currency strength indicator. It's the starting point of your analysis. This disassembles the Forex world into the building blocks of the market itself, the 8 primary currencies. The indicator then tells you instantly which currencies are rising strongly and which are falling strongly, and those moving in a range. Just as important, the indicator signals when a currency is approaching an overbought or oversold state, with a possible reversal in trend. The 8 currencies are displayed as individual coloured lines, making it quick and easy to spot trading opportunities. If one currency is rising strongly and another falling strongly, then a strong trend is likely to be developing. If 2 currencies are rising or falling together, that pair is likely to be in congestion and may not be one to consider at present. Equally, if one currency is strongly overbought and another strongly oversold, this is likely to be the signal for a potential reversal in trend. Here it's a case of getting in early and maximizing profits as the new trend is established. Changing time frames is a breeze, and within seconds you can see how all the individual currencies are performing from 1 minute to 1 month and back again. Then it's over to the charts for further analysis. Next comes the currency array indicator, which takes you to the next level for your analysis of strength and weakness. And here you want to see the strength of the trend in all 28 pairs. The indicator reveals instantly, graphically, and in all time frames which currency pairs are trending higher and lower with the greatest speed and momentum. And as you might expect, it also displays those currency pairs which are in a congestion phase with little or no trend. As the trends develop from the center outwards, so the angle of the trend line increases constantly until it reaches an extreme on one side or other of the array. As a pair begins to move away from the center and the gradient increases, so the trend is developing and an opportunity to join in as it picks up momentum. Indeed, one of the beautiful features of the array is you will actually see momentum instantly and developing in real time as the currency line sweeps higher or sweeps lower, gathering pace as it does so. This is like the pendulum on a clock, first sweeping one way and gathering speed before slowing and reversing to change direction and then gathering speed once again. And just like our pendulum, once the line representing the currency pair begins to reach an extreme, then we have the possibility of a reversal in trend and an opportunity to jump into a position early. And this is where a further feature of the indicator kicks in. As a currency pair approaches an extreme, the indicator signals a potential overbought or oversold state being reached. first with a darker color signal and then confirmed with a brighter color. At the same time, the array itself changes from a dash display to a solid line. It's like watching 28 price charts simultaneously, but from one screen. Finally, the indicator delivers a third advantage with all the pairs duly ranked, from those most heavily bearish to those most strongly bullish. And of course, the array will tell you instantly if the sentiment for one currency is universal. If it is, then the pairs will all be aligned. If it's not, you will see divergence on the array. And the simple example here is with the Japanese yen. If all the yen pairs are on one side or other of the midpoint, then sentiment is universal across the market. If they are not, then one or more of the pairs is out of balance, and like the currency matrix, may be signaling rotation out of or into the yen. Whichever is the case, it is either a risk to be avoided or an opportunity to be grabbed. From the currency array, we move to the currency matrix indicator. This ranks the 28 currency pairs in a leaderboard of strength and weakness in your chosen time frame. Here, you will see instantly those currency pairs which are rising, those which are falling, and those at the extremes of strength and weakness. In addition, by selecting one currency, the pairs in the currency complex are highlighted, which then confirms whether sentiment for the currency is universal. As an example, if the US dollar is being bought in one currency pair, we should expect to see buying of the US dollar in all the major currency pairs, which is then reflected in the leaderboard. In this example, we should see all those pairs with the US dollar as the counter currency falling on the leaderboard, and those with the US dollar as the primary currency duly rising. If so, then sentiment towards the US dollar is universal, and any position we take in one of those pairs is lower risk, as we are trading with the universal flow of sentiment in the market. However, if one of the US dollar pairs is out of step and moving in an opposite direction, several things are clear. First, if we trade this pair, it's likely to be higher risk. Second, this may be an opportunity to investigate, since this pair may ultimately rotate into the direction of universal flow. Third and last, this pair may be signaling the start of the rotation out of the current broad market sentiment, and is perhaps the start of the end for the current bullish trend for the US dollar. As with all the indicators, changing timeframes is very quick, so you can cross-check on the slower and faster timeframes before jumping in. Using a multiple timeframe approach applies just as strongly to indicators as to charts. And finally, to complete your dashboard comes the currency heatmap indicator, which delivers a two-dimensional global view of risk and sentiment on one chart, vertically in the ranking table and then horizontally across the horizon of time. Instant, simple, and powerful. The table itself displays whether a pair is bullish or bearish, pulling the data from the currency matrix. This gives an instant view of sentiment for the pairs. If the performance score for a pair is negative, then it is bearish, and each cell of the table is painted red. If the score is positive, then it appears green. Viewed across the time frames, this gives you a real-time view as sentiment strengthens or weakens. You can think of this as the ripples in a pond which reflect sentiment rippling through the market. As sentiment changes in one time frame, you are then looking for it to change in another, and perhaps highlighting the start of a longer-term change in the trend. If the 1-minute chart changes colour, followed by the 5-minute and perhaps the 15-minute, then this is potentially signalling a strong change in trend, which may develop still further and out towards the slower timeframes in due course. As traders, we all understand the significance and importance of time and time frames. Sentiment in a slower time frame will always require a more significant change in the trend to move from bullish to bearish or vice versa. In other words, time carries weight in the sense that a trend on an hourly chart will be more significant than the trend on a 1-minute chart. The indicator takes this weighting into account when calculating the ranking scores, thereby revealing a truly global view of the relative strength or weakness of the 28 currency pairs. This is the second concept associated with the indicator, which is that of the vertical ranking of the pairs. In other words, the global ranking of the currency pair relative to all its peers. If a currency pair is ranked at the top of the ladder, then relative to all the other 28 pairs, and based on a weighted calculation across the 9 time frames, that currency pair is the most bullish in the market at present. Equally, the pair at the bottom of the ladder is the most bearish. In both cases, the ranking will be backed up by the weight of sentiment across the heat map itself. In the first case, a greater number of cells will be green, and in the latter, a greater number will be red. For those currency pairs moving higher or lower in the ranking ladder, the associated cells will also be changing, reflecting changes in sentiment across the time frames and either supporting a move higher or confirming a move lower. For a pair to move up the ranking ladder, an increasing number of cells will need to transition from red to green as the rippling change in sentiment drives the currency pair higher. Equally, for a currency pair to move lower in the ladder, an increasing number of cells need to change from green to red, from the faster to the slower time frames. The currency heat map is all about context and risk assessment of the trend in the different time frames. In other words, a micro and a macro view. The micro view is of each time frame and how the currency pair is performing across the time horizon. The macro view is then of the currency pair and its relative ranking. As a forex trader, the indicator delivers the complete view from micro to macro and back again, allowing you to assess risk. If a pair is rising and bullish on the ranking ladder, yet some bearish sentiment is evident on the faster time frames, then you are trading against the dominant trend and a higher risk trading proposition as a result. But in the same example, if the faster time frames are signaling the same bullish sentiment, this represents a lower risk proposition. In summary, the currency heat map is simply that: a heat map of the currency world from the micro to the macro and on a single chart. Together with the currency strength indicator, the currency matrix, and the currency array, these 4 indicators combine to deliver a complete, unique, and all-encompassing approach to the complex world of trading forex. You can, of course, buy them individually, but then why would you, when you can purchase all 4 together in this unique package? You can discover more details about this package and all the other indicators from quantum trading at www.quantumtrading.com.